The scan flagged it. Bitcoin just closed June down 21%. Record $6.5 billion in ETF outflows over 2 months. Worst since launch. That's the system's top anomaly right now. We finished today on the #1 ranked stock and ETF from SignalFinder Pro's Best of Best. Stick around. SPX closed just under its resistance zone, momentum stalling right at the highs. Both the S&P and the Nasdaq bounced off their 50-day moving averages today, but the Nasdaq still has unfilled gaps directly overhead, and the SPX weekly momentum signal flipped bearish last week. So the short-term and weekly reads aren't agreeing right now, and that divergence is exactly what the system has flagged. The 13-month high dollar and Thursday's NFP data are the next test, and COT data shows large speculators increasing net short exposure into the weekend. The squeeze setup goes live if SPY clears its overhead level. The 30-year Treasury yield hit 5.16%. The back end clocked that as the highest level since the run-up to the financial crisis. TLT's $84 support gave way, while the 10-year broke above the 4.5% pivot at the same time. The dollar is at a 13-month high, and U.S. net interest expense has climbed to 20% of total tax revenues, up from just 10% in 2020, the highest that figure has been since the 90s. That's the macro backdrop the system is operating against. A fully risk-off bond and dollar read heading into Thursday's NFP. Energy is the mixed bag in today's scan. WTI crude is sitting near $68, and quarterly losses are deepening as oversupply risk weighs on XLE and XOP. Geopolitical uncertainty around the Strait of Hormuz is injecting noise into the signal, but it hasn't been enough to flip energy into a confirmed directional move. Oversupply on one side, geopolitical bid on the other. The system's read here is mixed, not directional. Gold is holding well off its highs. It's pulled back roughly 28% from a blow-off peak earlier this year, but central banks are buying at roughly 1,000 tons a year, well above historical pace. That's the structural bid keeping it from falling apart. But here's the catch. Volume on GLD's up days is thin, and copper is pulling back sharply. When gold and copper diverge like this, the back end flags it because the structural story and what's actually happening in the near-term tape aren't the same thing right now. Taiwan is the standout in the international scan. EWT is up over 61% year-to-date, running well ahead of everything else in the group. On the other end, China's real estate market has reverted in real terms to 2005 price levels. That's 20 years of gains effectively gone. That story is a cautionary parallel the data keeps surfacing. The 13-month high dollar is a headwind for emerging markets broadly, so EEM and EM as a whole are absorbing DXY pressure while Taiwan just keeps running. Crypto is in full institutional de-risk mode. Bitcoin is in a confirmed bear market and confirmed downtrend. June closed with a 21% decline, and ETF outflows hit a record $6.5 billion over the past 2 months. That's the worst redemption stretch since these funds launched. IBIT is down more than 50% alongside Bitcoin. The next structural level the backend has flagged is the 300-week moving average, well below where the coin trades now. That's the key downside marker to watch. Here's where the system narrows it down. SignalFinder Pro's Best of Best has filtered the market to 103 symbols today, the names showing the strongest structural setups relative to everything else in the scan. In a mixed market like this one, the ranked shortlist is the most useful output the backend generates. We're not calling macro direction. We're surfacing what's holding up structurally, and the top sectors, top ETF, and top stock are coming up next. Top sectors from the Best of Best. Industrials ranks #1, down about 1% on the session. Technology sits at #2, also in the red. Real estate rounds out the top 3, just barely green. And it's the only one of the 3 showing a leading signal state. The system sorts by structural rank, not today's price action. So industrials and tech sitting at the top of the table, while they're both in the red, tells you where the scan sees relative structural position inside that 103-name shortlist. The #1 ranked ETF from Best of Best is XBI, the Spider S&P Biotech ETF, pulling back about 1% on the session. Biotech has been one of the more volatile corners of this market, and what the scan surfaced here is its structural position relative to the other 103 names on the shortlist. The chart and the SignalFinder Pro viewer give you the full setup the system ranked at the top. Watch how XBI holds around these levels as the broader market digests the macro data we covered. Rounding out today's best of best, CrowdStrike, CRWD, is the top-ranked stock from the shortlist, and it closed higher on the session. That's one of the stronger prints on a day when technology broadly is in the red, so CRWD is holding up well relative to its sector. The system ranked it at the top of 103 names. Cybersecurity showing relative strength while the broader market is under pressure. That's exactly the kind of divergence the scan is built to surface. That's the full system readout. Macro is bearish, the US 30-year hit 5.16%, TLT support gave way, and the dollar is at a 13-month high. Indexes are grinding near resistance, while Bitcoin confirmed a bear market, a 21% June crash, and a record $6.5 billion in ETF outflows. Best of best narrowed to 103 names. Top sectors, industrials, tech, and real estate. Top ETF is XBI, and the top stock is CrowdStrike. Verify both live in SignalFinder Pro before drawing any conclusions. And remember, this is educational content, not financial advice. Do your own homework.